Hey, thanks for tuning in. In this video, we're doing a weekend review for the week ending March 11th, 2022. We're looking at a chart of the S&P 500. This is a weekly chart, and she is breaking down. Momentum accelerating to the downside. Sellers coming in, pushing price back below the bottom of the band. That simply is showing a -2 standard deviation from mean move. The thing is definitely extended to the downside if you're measuring mean as a function of SMA 20. However, she's closed below it, tested it, confirmed it to be supply, and is now trading lower than where that first pivot was. 420.76, close 420.07. So this close here was a very, very important week at January 24th and the February 24th. So closing below those is just not good for the bulls. And really, this down here is your ADX. And any ADX above 30 is going to indicate a trend. And what's really interesting is, we kind of saw this with PPO. I brought this up back here, like the high of PPO was here. Then you put in a bear cross, and pretty much kept hitting all-time highs until here. Right, and the PPO had already given back basically half its way to zero. And then it accelerated lower. And what I'm trying to point out is that the trend died. Right, it got above 30. On the dip it resets. But you started seeing this bearish divergence play out in ADX and in PPO. And what we ultimately saw back in November was the non-confirmation. We saw all the small caps, IYT, transports not confirming these move higher, in IWM and SPY. And ultimately a big bull trap on SPY, bull trap on IWM, right? Close above this high, 470.65 right here, 474.96. That's generally a bull flag breakout after consolidating for 6 weeks, and ultimately all that energy just got released to the downside. Back to the low of the breakup bull flagpole, right? So it just comes back down, tests the low. Well, that low has been broken on a weekly close. Let's zoom in, and obviously the ADX is accelerating higher. And as a result, you've got 45.63 and the close of 46.80. So again, more of this downside momentum being confirmed. And really, it's trend mode down. And if you look at the daily, you'll see right. The 10, the 20 are providing supply. Price cannot get above. So you have two options, right? When price gets way down here, below the bottom of the band, and closes back inside the band, then you can say, look, we're looking to play mean reversion back to the 20, where we're going to look to get short. Why? Because the direction of the 20 is down. Same thing could happen down here. You close below the low, close back inside, look for a trade back to the 20. Right? But now we've kind of done that trade twice. And the trend is really starting to accelerate lower on the weekly. But on the daily, what you'll find, which is very interesting here, is that this ADX, like each move lower, is on less and less bull momentum. And the and the rallies higher are on increasing ADX. And so what you are getting is a little bit of this coiled PPO, The histogram basically flat at the 0 line. And a posture here which can really go either way, right? This is coiled. It's ready to break the higher low pattern. We're just running out of time, right? The low now, 38.79, is going to go against 29.16, and this thing moves 10 to 20 in a day. But the point of me even bringing it up is that unlike on the weekly, which set a higher high this past week, right? So low in price, high in ADX, another low in PPO, and you can see the distance between the blue and the red are accelerating. So you're getting all the signs that say lower prices are highly likely on the weekly, and the trend is intensifying. But you're not really seeing that on the daily. And, the way that I like to trade, right, is, go to the left. Do you see a big green candle or a big red candle, right? And we'd like to be inside big green candles. The closer to the low, the better. That gives us a range to trade against, a very clearly defined level to trade against. And you can see this getting super coiled. You call this a bull wedge. We had a bull flag pattern that came back down and is trying to test this low, may even set a new low. May come down, fill this gap at the 400s. Yeah, where is it? Right here. Looking down here, there's not really too many gaps until we go lower. So this is the obvious area, and even this one here on the hourly charts, 396 would be my downside target. Pretty much by OPEX. So in the bear scenario, no doubt about it, they're going to come down here and fill the gap this week. In the bull scenario, they could end the week anywhere between 435 and 445. There's a gap up here that they could go fill by Friday and have all this energy get released. But this is how I look at it, right? I was telling you, go to the left, find a red candle or a green candle, and then that's going to give my eye like the symmetry. Right, so this is really what we're looking at. You can take all these lines, well, not all of them, but a good portion of them off. And you can say, here's what we're expecting. If you stay above this low, 410, and the probability still pushes price higher to 440. Now, the closer you get to 440, it becomes a sell. Above 440, you'll get this release of energy to the upside, and 470, this gap up here, 460s, all on the table. If you fail to do that and close below the 410, then price could accelerate down here to 380. And this is just based on the last set of buyers that came in, bought, and now will be forced to capitulate because price is below their entry. And if you're a trader that's practicing risk management, you'll generally, hey, I'm buying against this low. If we get any, day or two below this level, I'm out. Well, they know that. That's why they're coming down either above this level, right? Hey, if they break above, I'll buy. I'll quit my short. Hey, if they break below, I'll quit my long. What do? They come up here, they get everyone out in this direction, they come down here and get everyone out in that direction. Why? Because the goal of the market is to distribute shares. That's it. Right? They don't get paid to take positions and bet on Facebook outperforming SPY. No. They get paid on filling orders. That's it. All right, so that being said, you've got a very, very interesting picture, and really the theme I want to keep in mind here is that you've got this massive run on the monthly, where PPO crossed back here July 2020, and we're now getting a bear cross in January 2022, right? And now we haven't closed below this outside low candle, but we're getting pretty close. And if you look at the quarterly now, 1, 2, 3. So this is the low of the last quarter, this 426 level, and then the low of Q1 2022. You're going to see we've done a completely round trip. And everyone who's participated now going back until basically June or May of 2021 is in the red, which is not what you want to see. And so how they close this month is going to tell us a lot. But what we are seeing is momentum has turned down. Now, I could argue, hey, look, every time the histogram goes negative, historically on the S&P 500, that's been a great time to buy. Every single time. Every single time. Okay, you might have to wait 5 to 9 months, but historically speaking, you were rewarded. Now, is that a function of this is just SPY and that's what it does, or is that a function of a recommended trading strategy? I look at it as just one piece of data. It is not a buy-sell call. So take that for what it is. That being said, the 20 generally provides some battle on the monthly chart, regardless of PPO being in a bear cross or a bull cross above the zero line or below the zero line. Right? So like she sliced through right here, and that was the one time. But again, she had tested this level 7 times, right? She hasn't tested the 20 at all. Not one time since the 2020 plunge. So you have to view this as mean reversion in an uptrend on the monthly, despite having a PPO bear cross, which is really a 1226 EMA crossover. You have to view that this high was set on huge ADX, huge PPO, huge momentum confirming this. The only time higher was the high into the 2000 crash. And then you've got to look at the fact that, we've got 3 red months in a row now. We're approaching a rising at 20 at 410. The gap at 400, a spike below, which is par for the course, could all be in play here on the monthly. And, until they get below and stay below the middle of the monthly 20, then there's no reason to talk about sub 400 levels. There's no reason. 400's the target right now. Okay, we went to 410. If 400's the target, what's your risk reward for a bear? It's not that great. I'll let you do the math. That being the case, right, it's in a downtrend on the daily and on the weekly, but it isn't in a monthly uptrend, and the hourly here really doesn't have a trend. The bands are going sideways, the 10, the 20, the 40, they're all basically sitting on top of each other. And the 20, which is in an obvious downtrend, right? Price is below the 20, is at 438. Current price, 420. So the bears have some cushion here. But the point I'm trying to say is price came down back in January. It's now March, and price has done nothing but go sideways into the fundamental meeting this week with the Fed. Okay, so we try to tie the psychology of the crowd, which is very, very bearish right now. I mean, you can see that function, while looking at, say, the VIX. You can see that the fear is very high, and it's been high now for 4 months. Right, going back to the beginning of December, VIX hit 35, VIX closed at 30. All right. Now, I will say that this is a very bullish looking chart. Looks a lot more bullish than the S&P 500 on the daily. But when you zoom out to the weekly, You zoom out to the monthly. What do you see? That there is no trend. There is nothing. You could argue the monthly. Look at that PPO cross. Hey, look, ADX never gets below 30 here, right? There is no trend, right? So what we can do is look at the daily and say, as long as we're above the 20, you got to respect the risk, especially the 20 and the 40. But get back below this 27, get below the 40 here, and what you will have is more of an ABC, something like this. Again, I don't want to do any, I'm just saying that, back down to this trend line, back down to the higher lows. Lose the 20, it unlocks this level. The point of me bringing this up is that there's been a lot of fear in the market going back 4 months. We've got the fear. We've got the fundamentals this week. If anything in the Russia-Ukraine crisis tends to get better, because again, from the market's perspective, that's a function of, have we priced in all the bad news, or is there more bad news to price in? Right? It's kind of like the COVID crash at the lows. Why did they bottom? Well, it's a function of supply and demand, but also a function of, well, we've closed everything. What else is there to do? Right? So when you price in worst case scenario, that tends to be when the market takes a flip. But yeah, just one thing to point out here on the weekly of this VIX too is that this little short-term trend is definitely in question. But this is a very, very bull-looking chart on the daily and the weekly. Just had a PPO bear cross on the daily with a divergent high. So, of caution, this is a head and shoulders pattern. This is the neckline. Breakdown below could get price going way, way lower. But again, got to get below 23, stay below, and then you have yourself a top. And this uptrend going back to October in fear will have ended. But just keep in mind that the time to buy VIX is down here at this line, okay? It's down here at this line. When you're buying VIX above 30, odds are you get crushed. It's just how that works. So let's go check out IWM, who looks a little bit different than SPY. And I know I've been on a bit of a rant here, and we haven't even gone through the four major indexes yet. But here's IWM, coiled tightly, right? No trend on the daily. Fourth tag of the 40, the 10th tag of the 20. I don't want that short anymore. Do you want to short that on the fifth time? Do you want to take the long at 190 for the fifth time? No. I don't want long or short here. I want to see this thing resolve and then be on the right side of the trend. Now, what I will say is that this ADX, right, the trend, every time ADX got above 30, it was when price was heading lower. Okay. And then price would head higher, ADX would go lower, back to zero. ADX would then rip as price heads lower. Well, this time price head lower. ADX couldn't get above 37. Last time she got up above 50, right? So what we have here is a peak ADX. It coincides with a trough in PPO. Now we put in this divergence in PPO, divergence in ADX, bearish divergence as well as a bullish, or positive as well as negative. But the point of bringing it up is that there is no trend here. These are getting very, very close. The histogram's 0. PPO red and blue are at 0, basically no distance from each other. And the bands and all the moving averages are basically going sideways here. And, the point, again, is everything's waiting on the Fed. Right? It may seem like, the bears are winning, or it may seem like the bulls are winning. No one's winning going back to January 24th, unless you're a day trader. You could have done these swings, right? We took a lot of swings to the upside here, went to cash, started buying more here, here, all these days. But again, it's like you either going short here, here, or you're going long here, here. That's it. Don't be the guy who's trying to go long here, go short here, go long here, go short. That's just not sustainable. You won't win in the long run. And you're going to get so confused because the signals that you're watching on an hourly time frame only, because that's the only way you'd be able to do that type of trading, would just require so much management. You'd have to be at the computer all day. You'd have to be looking. And it's just not something that I would recommend. Either way, the structure is a big bear flag. The structure is a wedge almost, a bear flag, bear wedge inside this. But what is not correct about that pattern is the volume. Okay, and this is always what's confused me about this chart since the low in January is this volume was more volume than the COVID low. Right, it's the most volume going back to the 2016 November timeframe when Trump won. It's the most volume on IWM. All right. So I don't know if those people are going to capitulate. I don't know if this is accumulation. I don't know if this is some weird bull flag pattern here, and really price is going to get all the way back up here to 226. Maybe 220. I don't really know. All I can say is this is a lot of indecision. Wicks up, wicks down, and basically price has remained unchanged since the close of the 17th and that January 24th low. Price has remained unchanged. 1, 2, 3, 4, 5, 6, 7. So the bears are running out of time. The bulls are running out of time. There's going to be resolution to this pattern. And if you just look at the trend of the short-term moving averages, the 10 and the 5, you can see that it's definitely going down. But the histogram is showing you that the distance between the two is decreasing. Right? And this ADX peak on each one of these lows is decreasing, and the trough is increasing. So you're going to get a break here again. This is a very tight coil, and odds are that it goes lower. There's a gap down here. It's my obvious target for a couple reasons. When you look at the monthly here, look at this PPO. 11 to 6. So what I'm anticipating is a period like this. Right? Just like this period here. Where PPO is at 10, had to reset to 0. It took 2 years. Right? February 14th to February 16th. Took 2 years of going sideways. In what? In an ABC structures. Right? These corrective structures. It's all they do is they go up, they go down. Then they go down, then they go up. Right? They just keep that. We're searching for liquidity in this market, and really we're the goal of the market makers is to confuse everyone as much as they can. So what does that better than something that just goes up, up, and then goes down, then goes up, up, right? Of course, that's the most confusing pattern. So anyways, I think that's what you have here. And when that happens here, what happened to price? Price came into the 20 and then set a new all-time high, despite PPO resetting to 0. Never got the bull cross like she did here. Right? 8 reset to 3, 10 reset to 0, 7 reset to -1. Now boom, breadth thrust, right, from -1 to 12, massive move. Now we go sideways, we digest the move in a series of ABC patterns, right? A, B, C. I do believe that to be true. Now we're looking for something like this at minimum. Also note that this is the first tag of the 20 going all the way back to the breakout in 2020. So again, when you haven't touched the 20, same thing here. November 2012, first tag of the 20 was basically 2 full years later. After capturing the 20, first tag of the 20 was a year and a half later. Okay, what does that generally mean, though? It means that price is reverting to an average, and that this move, this distribution, where everything goes up month after month after month after month, that has ended, right? And when it ended here, January, February, March of 2021, all the small caps, mid caps started selling off, micro caps selling off, and price reverted to mean. And by the time it actually got to mean, a year later, most of the things under the hood were just destroyed. And this is why owning the ETF is just so much more valuable, or swing trading the individual stocks and swing trading the individual ETF. Because, even after she topped, price has basically just gone sideways, right? Because she, inside basically this month here, March, that big old doji, the next month he closed inside the band. So this was the top right here. So yeah, just keep that context, right? Monthly trend is still up. Weekly is down, daily is flat, and in some instances the hourly here is working on a complete flip, right? So as of March 11th's open, price was above all the moving averages. The posture was wrong. This is still a bear posture, the 200 being above the 40. So it takes basically, by the time price gets above 200, you'll have yourself the right posture for all these moving averages on the hourly. So what is, long story short, that would, in one day they could flip this hourly chart to be hourly long. They could flip the daily to be, all right, we're above the 20, we're above the 40, we're marching towards the 200. So daily long, hourly long, weekly down, monthly long. That's a very different picture than where she's been, I don't know, most of March, most of February, which has been down on all time frames. January 24th's rally is what flipped most of the charts up, but they never flipped the weekly, and almost instantly gave up the daily. And so it's just telling you that the bears are really fighting here. They're trying to flip this down again, because what's at stake is the quarterly close. All right, and what you have, 1, 2, 3, is a quarterly candle now on IWM that opened at 227 and is looking to close. And we'll see where they close. And really, this momentum has just fallen off a cliff, right? Just fallen off a cliff for small caps. Has not caught a bid in 13 months. We'll take a look at QQQ and then wrap up. I know this video is long in the tooth. Same thing here. Right into the 20. Hasn't touched the 20 in 2 years. Everyone thinks the world is ending. But again, this is the third tag of the 20. And they really haven't caught a bid. And now they're below it. So if they slice through the 20, they're going to the bottom of the band. And that would be around 260s, 270s, maybe 280. And when you zoom in here, the same problem. At the bottom, very obvious downtrend. At the bottom of the range, has tagged the 20 6 times now. Can't even get to the 40 like you could on IWM. So QQ's relative weakness, and it's been this way for some time. What we'll do here to wrap it up is take a look at some of these ratios like IWM to QQQ. Okay, so this is that double bottom that we've been watching. Held. So the rallies off of the March 2020 lows that led to the January, February 2021 highs, they've held. So you have at minimum double bottom, if not, hey, look, we come up now and break 7.4, and we've got ourselves a trend change for the first time on this relationship for probably 10 years. And when you look at the daily, you can see that since she bottomed on in February, really that January 24th low, coming off that low, it's been all the IWM. Okay, so to me, that is an area of focus. Even when you look at IWM SPY, IWM outperforming SPY, and this is the real one, IWM destroying SMH. For the first time in a very long time, IWM is leading all the way out off the lows in 2022. IWM destroying SMH, XLF, beating XLF since the January lows. The only one that she's not beating is XLE. And XLE's beating everyone. Right? IWM versus XLK, rather own IWM. So A, relative strength in small caps. Okay. Let's take a look at SPY versus gold. SPY's been getting wrecked. Right? And I wanted to bring this up because gold is definitely on my list, on my radar. But did she just put in a top? I don't like the look of that candle, especially on that volume. We'll see where they close. One candle does not make a trend, but I don't like the look of that candle. After being above the top of the Bollinger Band for 3 weeks in a row, you now have a reversal candle on volume at a lower high. Right? And, you know, the ADX looks great, but at the same time, it's, you know, it's gone from 8 to freaking 50. Like, every time that generally happens, it's the end. It's the end of the move. Right? It's not the beginning. 1 to 60, beginning. You know, 8 to 50, end. 28 to 50, end. 70, end. Right? And you're seeing here, you know, they break above this, so there's no divergence here. Right? No divergence. Gold is a hot item right now. But that being said, this ADX on the daily looks like a peak. PPO's curling down. Gave up the 5. Gave up the top of the Bollinger Band. The top of the Bollinger Band is now curling sideways. This gap on volume, so you had all these buyers, right? Low of 188. Then the very next day you close at 185. So they're all trapped long. Every freaking one of them. And then now all of a sudden the chart is done going higher? I don't know. I mean, we're gonna have to find out, but I will say the first step is to close below the 5 after giving up the 2 standard deviation mean move. Then it's to give up the 20. And once they've done that, the target is the other side of the band, and that will end the correction. Right now, though, this thing looks like it just started a correction. And most commodities look to have topped. That is the takeaway that I have across the board. Now, you can look at names like APA. Right? Still closed outside the band. This is weekly. You look at something like ExxonMobil. That looks like a top. Right? At the top of the band. Extended 30% plus. But the 40 just crossed the 200. Right? And so when I look at this, extended 5, all I'm looking for is a 50% retrace of this move. Somewhere in that range. Come back down. I'm not saying that the bull market's over forever in Exxon. That's not what I'm saying. I'm saying that this thing that has been going strong now for a year and a half is likely due for a pullback. And how they close this monthly on all the oil names, all the gold names, is going to be very, very telling. Like this weekly on Exxon is telling me that, you know, to be very, very cautious of buying any of those names. And, you know, GLD and GDX, we kind of got the same picture. It's like, I don't know. This, though, is generally not good. A huge wick, close at the bottom. This is a doji. It's kind of like a, dragonfly. It's basically no good. It means buyers tried to push higher, but sellers were able to bring them all the way back down to where they started the week. So no ground was gained for the bulls, despite everything that happened from a fundamental standpoint. That's kind of the SPY to gold thing. Maybe this gets some reversion back if you pull up the bands over here just to give you some distribution measurement, right? Look how, like, we're below the bottom of the band and have been for some time now. So a reversion back to the middle of the band is what is expected. But, just checking this out, I mean, going back to candlesticks, riding the bottom of the band, I mean, is the 200 the destination right here? It definitely could be. So there could be a little bit more pain, but ultimately we are looking for a reversion and for SPY to go higher. Whether it's from 400, 398, or that the bottom's already in at 410, that's what we're looking for. And it kind of, we kind of have confirmation in all these different measures. And we'll take a look at a few more, right? New high versus new low. I like this one a lot. The weekly, we'll go back to line chart because I think it's a little bit easier to see. And you can see this is obviously a downtrend. And we need a breadth thrust to exit this, right? We could remain in this scenario or configuration for a long time. Now, what I will say, the January 24th low, the February 24th low have now put in higher lows. So one more thrust lower this week could either break these lows or hold, and then we try to march higher again. But right now it's very obvious that price is stuck between the 0 and the neg 800. All right. Oh, I'm sorry. Neg 800. Right. So we're just stuck between here. We got to see which way she resolves. The McClellan oscillator, right, back down here. This was the buy signal. She's not showing us the buy signal. She's coiling very tight for another big move. If it's up, it's likely a sell. Right? If it's down, we're going to get that buy again. That's what we're looking for. We'll take a look at the percentage of stocks above the 200-day in the NASDAQ. Just absolutely full-blown liquidation. This will continue. I don't see this stopping, but we could have a higher low, right? So that's how these things work. But again, this V-shaped recovery is super rare. And here we are testing its lows. And the same thing is true with the 50. So that's pretty much all I got this week. I know it's a bit long. I hope you enjoyed the content. If you liked the video, hit the like button, subscribe to the channel, check us out on Twitter, give us a like, share it. Do whatever you need to do. Appreciate the support, and we'll see you in the next one.